Good evening, everyone, and thank you for joining us today in what I believe is a critical and a very exciting topic of conversation. The discussion on regulation as market design, enabling women in climate and tech. So good evening, Aparna, Shyamala, Sumesh. It's a pleasure to moderate a panel which is this experienced. As a context, advancing women's empowerment and economic participation in emerging sectors is a key priority for the UK government's global development and climate agenda. Those who know us are aware that Winpe's vision and mission focuses on bringing gender diversity into the PEVC ecosystem. And so, we are absolutely thrilled to partner with the UK Foreign Commonwealth and Development Office that we know as FCDO on a series of dialogues on catalyzing gender equity in climate and tech investments. We convened the first dialogue in this series in the end of January, bringing together policymakers, regulators, think tanks, institutions, DFIs, and investors to examine how capital allocation in tech and climate sectors can respond more intentionally to gender. One insight that emerged in the earlier dialogue was that capital allocation systems are not neutral. They respond to the signals that regulators send. Globally, there is increasing evidence linking diversity to stronger economic outcomes. For example, McKinsey's Diversity Wins research, covering more than 1,000 companies globally, shows that firms in the top quartile for gender diversity are up to 39% more likely to outperform on profitability. And research in asset management indicates that diverse investment teams generate roughly 45 basis points higher annual net returns. So in other words, this is not only an inclusion question, it is also about market efficiency and capital allocation quality. Now, we all know regulators have historically played an important role in shaping how markets evolve. So how can regulators intentionally design markets where women in climate and tech are not exceptions, but they become participants by default? Let's find out. And with that, my first question: what role can regulators and policymakers play in advancing inclusion and sustainability in investments, particularly in sectors such as climate and technology? Aparna, could we please start with you?
Thank you, Nupur, and a very good evening, everyone. Very glad to be here as part of IVCA's event, and warm greetings to my panelists as well. Let me start off with a small note of disclaimer. I don't usually do ESG or sustainability or any inclusivity discussions at very lavish, massive events like these. I find it a bit ironical. It is like discussing world hunger over a lavish 7-course meal. But I also thought that it is useful to be looking at the audience, and we have a lot of fund managers and capital allocators who are here. So I just thought that it's relevant to talk about a topic like this to the audience that truly matters. So happy to do this. Let me start out by putting some stats on where we stand today on this topic. I was looking at this MSCI Women on Boards report of 2025 that was released. If you look at a global stage, Nupur, women occupy about 30% of the board seats overall, and this is again at a global level. This has come up significantly from about 18%, which was a number about a decade ago. Similarly, if you look at within India, there is this number that's put out by the Ministry of Statistics and Planning and Implementation, the Periodic Labour Force Survey report. Here again, we stood at about 37% in FY 22-23. This has still, it has gone up in 23-24, which is currently at about 42%. A tad lower than what the global average is. The global average is at about 49%, but I guess we are getting there. Be that as it may, I just thought I'll start off with few measures that SEBI has done in terms of what is expected of us as an ecosystem when it comes to either the societal angle, the gender diversity part. All of us know about the reporting requirements that has been put out for listed entities. I guess we were a trailblazer of sorts. I think we started this way back in 2012, when we had asked listed entities to report this as part of the business responsibility report. Now, of course, it is morphed into the BRSR, where we have specific sustainability indicators which have been put out. There are assurance requirements with respect to certain KPIs. The women person, independent director on board for the top 1,000 companies has proved to be a huge game changer as far as upping the ante, as far as how much is the women representation at the KMP, at the CXO levels of listed entities. You do know about, and again, we have a lot of fund managers. There are stewardship codes requirements which apply to institutional investors, which again, I think from an investor perspective, from large LPs perspective, these will be important parameters in terms of how you look at gender as a parameter when you're looking at allocating capital. Again, I can talk about the recent measures that has been done by SEBI with respect to, so for instance, on the mutual fund space. We've said that there is going to be in the commission that is being paid by the AMCs to distributors, there is an extra, we've gone the extra mile to talk about how the work that is done to include more investors and there is extra commission being paid for that purpose. So again, we have a good representation of women investors in the mutual fund space. 1 out of every 4 investors is a woman. About 33% of the AUM held is again by women investors. So these are some of the positive measures that has been done regulatorily over a period of time. I'm sure it will bear fruit in the times to come. We may not be there as yet, but I guess we are making good progress.
For inviting me. One disclaimer from me, because I retired from the Reserve Bank long time ago, so maybe whatever I say is whatever is in what information is there in public domain, and of course, even while I was there, certain measures were taken. So regulation is often viewed narrowly as a tool to correct market failures or enforce compliance. Yet increasingly, regulators and policymakers are recognizing that regulation also shapes markets themselves, by having rules on who can participate, who benefits, how the innovation takes place, with all our various measures that RBI has already taken to ensure that innovation, RBI regulation doesn't become a stumbling block for innovation. And in this sense, regulations function as market design. That's what Nupur was saying. So financial regulation, corporate governance regulations, procurement rules, and financial incentives, investment incentives do form the market architecture. But historically, these systems are often designed without explicit gender considerations. And if we thoughtfully design and expand opportunity, unlock new avenues, and correct structural imbalances through regulation, that will be very relevant, particularly to ensure women's participation and leadership in the climate and technology sectors. Financial products often overlook women-led enterprises or informal sectors where very many women operate. And RBI, of course, as you all know, has taken various measures, not necessarily gender-driven, but actually these measures do help in ensuring that more and more women are included in the credit space. One is, of course, the priority sector lending and digital financial inclusion initiatives. One thing one could consider really is this priority sector lending. There's only, I think, only one area where women are specifically mentioned for weaker sections. Maybe there is scope to review these guidelines to get even credit given to women in climate and tech, because women are at the forefront as far as climate change impact is concerned. And they are the ones who really understand how to deal with this kind of an impact and come up with solutions for that. The second initiative that government, RBI, NABARD has taken is really having SHGs and JLGs. Why don't we leverage these groups to get more women into these sectors, particularly in climate change and tech? Incentives are given by the government, but again, SHGs and JLGs are only women collectives. But really, there is no regulatory mandate as such, but then both the RBI and NABARD really encourage, and in fact even the government regularly look at data on how many SHGs have been financed, what is the amount, and therefore I think there is a lot of focus on women. Maybe it's high time that we also focus on lending for climate change and tech. Small finance banks and microfinance institutions have been, really landmark institutions that have enabled financial inclusion and, really lending to the underserved communities and have done a lot. And MFI regulations with RBI harmonizing all the standards has really enabled this to grow. One thing with these two institutions is because they are so much into this particular area, the private sector lending area, one needs to ensure the long-term sustainability. And I think that's where the RBI is even allowing small finance banks to become universal banks, and hopefully that should enable more lending to these categories also. And then, of course, the digital financial infrastructure, the identity-based system has enabled women to come in. But again, women are handicapped because there is a problem with regard to barriers in terms of digital infrastructure, connectivity gaps, digital literacy, and affordability. So one more thing that the financial sector can really do is data-driven supervision. Collecting gender disaggregated data on lending, entrepreneurship, and employment helps regulators identify structural barriers. So I would leave that thought that regulators must collect this disaggregated data.
Thank you, Shyamala. Thank you, Nupur. Thank you, Aparna. So I think before I come to the topic, just a quick 30-second on the UK-India partnership and relationship and the context in terms of why we are here. So the UK has been a strong, long-standing partner for India for the last, for several decades now. In terms of investments, through UK subsidiary, British International Investments, UK has been investing directly into India for as long as 30 years into the equity and debt space. The UK also has other instruments, for example, Private Infrastructure Development Group, PIDGE, and the UK has also been investing directly. In fact, India is the only country where UK invests directly from the government's balance sheet. So that's the department, that's the place where I come from, the FCDO, Foreign Commonwealth Development Office. India is a very unique country in the UK's universe where UK invests directly from the balance sheet. That speaks to the kind of maturity that the market provides, confidence to the ministers and senior bureaucrats in order to be able to take that risk in India. The kind of regulation, transparency, openness, investor protection, all of these aspects come in for the UK to help decide in taking and underwriting that sort of risk on its balance sheet. The UK, this last year, 2025, has been a remarkable year for UK-India partnership. We had PM Modi visiting UK. We had PM Starmer visiting India. We signed the UK-India Comprehensive Strategic Partnership in 2025. We had the India-UK FTA getting signed. So it's been a remarkable year. And, needless for me to say, gender is not a strategy for us. It's not that you either do gender or you don't do gender, or you either do inclusion or you don't. It is embedded in whatever we do. In fact, to tell you that even the UK-India FTA has a chapter on gender. It talks about how both countries will come together, build capacity, create ecosystem and marketplace where gender comes in without actually being, without actually pushing that agenda. So building capacity in not just in investments, but also on the policy side and all the other areas where inclusion forms the core part of it. Now, I think coming to the question on the role the regulator and policymakers can play, I think there's a huge, this is a huge opportunity. I think Shyamala and Aparna both spoke about the asymmetry, the market asymmetry which is there, which if fixed, if it can be fixed in a proper way, can actually give a push to how the investment industry in India is evolving. From our standpoint, we don't see gender and inclusion as a guardrail. We see it, from our standpoint, it's a role that we can play in market building. So if through our investments and through soft influence, if we can encourage AIFs, private equity funds to be more inclusive in hiring, to having more women in decision-making roles, on boards, and the regulator provides the right kind of ecosystem by reducing information asymmetry, by improving disclosure norms, by having these market standards, which actually reduces transaction costs for foreign investors like us. And if these kind of results that the regulator actually now have through BRSR, it's now there on the top 1,000 companies. Similarly, as it percolates down into the wider ecosystem of businesses and funds, it actually gives confidence to a lot of foreign investors like us that, look, this is a marketplace which is fairly evolved, fairly mature. There are systems in place for reducing information asymmetry, for increasing transparency. And there is reliable, trustable data which is available in public domain for foreign investors to take decisions. So I think regulator has played an immense and huge role over the past few years and decades. And like I said, needless to say, India is a market which UK looks at the market as a very evolved and structured market, and how the data can really be trusted. So I think there's a huge role that has played. Now it's also for the market to come and respond to the kind of environment and ecosystem that has been laid out, where on an organic level now we start believing in this and start growing in a more inclusive way. Thank you.
Thank you. Let me move on to my next round of questions. And the first one is to you, Shyamala. Now, from the perspective of the investing industry itself, what steps do you think investors and financial institutions take to strengthen gender-responsive investment practices? I know you said disaggregated data. So, can we...
If the funds are required to, I don't know whether I should say required because nobody likes any such requirements, but I hope you voluntarily you'll disclose the investments made. First of all, how many partners you have who are that they are women, how many women partners you have, how many women are there in the investment committee, how many portfolio companies are owned and run by women. And the other thing is also when you're investing in your portfolio companies, you could also nudge these portfolio companies to be just looking at, again, gender diversity, all the ESG related metrics as to what their own supply chains, the portfolio companies' supply chains follow. So I think these are all very good practices. And I do hope that the fund industry does this voluntarily. Otherwise, at least the market should require that. Maybe the, regulators we have, I think regulators will get criticized for being very intrusive. Although I must congratulate that SEBI did require women independent directors, and that really helped have more women on boards. But it's not easy to require women at, say, executive levels of leadership or at partner level, and that is that's going, perhaps it's a little tough for regulators to do, but I do hope you all do that. The other thing is that the fund industry should also recognize the intricate connection between gender and climate change, because that is not seen in, when you all actually raise funds, whether you all really look at this kind of connection between climate change and gender. And in fact, even for the UK development thing, very few development organizations and intermediaries have a double focus on climate and gender. So if we can have that, that will really help getting more funds into climate change related sector where women are really, really affected. Of course, like I already mentioned, enhanced disclosure practices, then investment structuring, I also mentioned that. You align your incentives should also be aligned to that, and dedicated capital platforms where you have specialized funds, funds of funds, or catalytic capital pools focused on women-led ventures. And new financial products, of course, that you all can do the financial engineering very well. At least you all are not affected or hampered by any regulation which says you can only do these type of products. You all are free to devise products as per the founders' needs and their risk appetite. And therefore, I don't know how much of engineering is going on, but we really look for financial innovation and financial products. But only one last thing I would like to mention, Nupur, is that very often there is a feeling that there is a financial sector solution for every real sector problem. And therefore, every time one looks at what financial sector can do, what financial regulators can do, you have to first look at the real sector, what needs to be done in terms of non-financial activity, non-financial infrastructure, capacity building, skilling, all of that, and I can assure you finance will follow. Thanks.
Thank you, Shyamala. Sumesh, if I could come back to you. From a government perspective, what policy actions can help build stronger ecosystems for gender-responsive investments?
So I think Shyamala did touch upon a lot of that. So I think at times I think we tend to over-concentrate on the financial aspects of it. We try and over-innovate with financial instruments. At times it's also very basic things, right? So Shyamala did speak about capacity building. So can at times the governments or policymakers come together and look at some sort of ground level capacity building, having enough for as basic as recruitment process. If in the investment industry, do we have enough pipeline of people, women, and enough pipeline of recruits coming in an inclusive way. So as basic things as that. Second, I think regulators started off with the process on accreditation. So how can we now disseminate more about accreditation so that more and more women at not just at junior level but also at fund manager level can benefit from that, because investors look at this process as a sign of confidence that the regulator is putting on the market, and it gives a sign, it gives the investors confidence to support especially first time fund managers. So like I said earlier, it's about reducing information asymmetry, it's about enhancing transparency, it's about higher standards of governance. Because for a foreign investors, governance is of paramount importance. So I think that's really important. Also at the ground level, from our standpoint, like I said, gender is not a segregated vertical for us. It's all pervasive. Now, when we look at investment funds, we don't, we really cannot mandate an investment fund to look at only inclusive enterprises, right? So, we can't really dictate for a fund manager to do that. But what we can soft influence is to work with businesses and entrepreneurs to have gender action plans. How can we help these businesses come up to the curve and have a gender action plan on how they plan to become more inclusive in a 3-year, in a 5-year period? So I think that's, it's not for the regulators, but I think, like I said earlier, it's now for the market to take the baton and go a mile further. So through gender action plans, through capacity buildings, alongside investments, can small amounts of capital of concessional nature or of grant, can that be attached alongside the investment capital to build that ecosystem? So I think that is, as an investor community, that's the role we all can play in building that, because I think there is enough in terms of reports and data points to point out that more inclusive investments also lead to higher returns. So it's also, I think, for an industry to pick that up and take that baton from the regulator and implement it at the ground level.
So Aparna, if we bring together the themes that we have discussed today, we're talking about governance signals, we're talking about financial inclusion pathways, and we're talking about designing and embedding gender into both investment ecosystems and capital ecosystems. I have 2 questions. One is, what would it take to integrate gender considerations more systematically into capital market structures, particularly within AIFs? And then as governments deploy multiple capital schemes through national budgets and policy initiatives, how can gender be embedded within these programs as a catalytic market expansion tool rather than be treated as a compliance mechanism?
Thanks, Nupur. Maybe I'll take the second question first. If you look at the need for capital itself, there are a lot of government-backed schemes that operate. Okay, now so SEBI has permitted tranching in a limited manner, and there are a certain set of investors, and again government and large multilateral are included as part of the junior investors in the blended finance structures. So that is again one interesting structure. Blended structures could be explored as an alternative where you can look at raising capital for sustainable enterprises. Clearly, government can probably take the lead, and private markets will, of course, follow where public capital leads. So that is, again, one thing that we could look at. Three elements that come to my mind. One is clearly the data, and both my panelists spoke about it. There is an urgent need for disaggregated data on gender diversity. Okay, so you can't fund what you can't see. I mean, you need to be, it needs to be put out there. The numbers need to be put out there. So disclosure is key. It needs to be, be it in terms of your PPM, be it in terms of the fund mandates, be it in terms of, maybe large LPs could, track gender metrics via their side letters. So these are things which probably will up the curve and actually, get things into action rather than just being a social agenda in conferences. So I guess it's time we actually, the rubber hits the road. We need to bring it into action. First is, of course, data. Second is through maybe incentives. Incentives could be aligned to action. So maybe via tax incentives, maybe via, again, fund mandates. So once you track the data, you have something concrete basis which you could incentivize enterprises which have diversified boards, which have diversified representation across genders. And third is certainly accountability. So you need some kind of commitment to be there. I'm not sure, again, how many of you read that report. There was this beautiful report that was put out a few weeks back by Kalari Capital, one from your own fraternity, which I think the title of the report was very interesting. It was something like to say the 4 rupee problem. Okay, it was as revealing as it could get. It basically said that for every 100 rupees that is raised by funds, merely 4 rupees went towards women-led enterprises. Okay, it was as chilling as that, and it was something, it is something which each and every person in this room must reflect upon. Again, on the representation of genders, it stood at about 36% at the VC analyst level, but as you rose up the ranks, I think at the partner level, it was somewhere in single digits. Okay, so these are, and again, the report is there on their site, and I had a look at it as well when I was just preparing for the session. But these are numbers which, truly we must reflect upon as an ecosystem, and, that's why I said accountability. So certainly one would be data, second would be incentivizing. SEBI's approach at least is not to mandate. Our approach would be to incentivize. So mandate it doesn't work. So, I mean, you can have a lot of compliance, non-compliance issues, and we will be only having a lot of back and forth. That doesn't help. It's a lose-lose idea, so I wouldn't advocate that. I would rather go for an incentive-based approach where we actually offer some, maybe again, tax incentives. We could look at, what could be done to really encourage firms to be looking at diversity. It should no longer remain just an agenda, but it should actually be a parameter for capital allocation.
Thank you. I'm looking at the time, but I do want to do a rapid fire round, a little bit of fun mixed up with all the serious messaging that we have. The first one, in one word. As of today, what is the single most important factor required to scale gender responsive investments? One single word.
Sure. Conviction. I guess everything else will follow suit. We need the checks to be signed.
I thought I'll mention collaboration because it's not something which any single firm can do. And because I've seen this happening, and where you had this public-private partnership, where you had the bank giving money under the Mudra scheme, the government giving subsidy, and the manufacturer of that, the solar itself, giving skilling, training to the women who run that enterprise, and of course an organization which does the last mile linkings.
I think from my standpoint, I think it will be evidence. I think colleagues spoke that there is enough on the ground which proves that it's not just a social benefit, it's actually hard returns, it's actually incentives that have worked. So more evidence, I think more we talk about it, such events, more we talk about it in industry. Kalari's report is a good example. I think there needs to be more conversation about it. So it's not just doing something for social good, it's actually more business sense in doing it.
Thank you. Okay, this is fun. As regulators or policymakers, you often receive proposals suggesting new interventions. What is, we've tried to use very polite words here. What is the most unusual or unexpected or maybe incredulous policy idea related to financial markets or investments that you have encountered?
It was funny. Someone wise once just said that, we should just let the gender imbalance play out, and in the long run, once we have enough women in the pipeline, I'm sure it'll get balanced. I guess the pipeline has been full for now. The taps have just not opened.
So I think somebody interestingly, in Parliament there is a reservation, right? So for women. So similarly, somebody gave a wacky idea. So okay, so let's mandate 30% of the team to be women before we look at funding it. But again, it's very, it's intriguing because it's policing. That's not the way we want to go. But there are these kind of incentives that in fact the market have suggested to be eligible to get funding.
So, we receive sometimes, I don't know whether this is incredulous, I think we keep receiving this suggestion. Every sector wants to be included in priority sector lending. So, every sector desires to be included in the priority sector lending norms. So, 100% of bank assets, if they are to be included in priority sector. But this is something which, at the drop of a hat, infrastructure, exports, another thing is to use foreign currency reserves.
Thank you. Last question. In a perfect world, if you could introduce one regulatory or policy intervention that is not market-driven, but institutionally designed, what single change could create greatest impact in advancing gender-responsive investment?
Maybe throw some sunlight around the disclosures. So I guess we will start off with getting the data right, and everything else will take it off from there.
Something similar that you just include them, in the ESG metrics also. Yeah.
Again, same measurement. I think just plain simple tracking data, measuring it, and putting out the data for others to learn and look at. So I think measurement, what we can't measure, we can't improve. So, yeah.
Okay, so as we round up, I think it is clear that we are at an important moment in the evolution of global capital markets. New technologies like climate innovation and AI are reshaping how economies grow, how capital is deployed. At the same time, investors are increasingly recognizing that governance, leadership diversity, and sustainability are central to how risk and opportunity are evaluated. For regulators and policymakers, this creates a powerful opportunity because the frameworks being designed today will shape who participates in the innovation economy of tomorrow. Because ultimately, the strength of our markets will depend on whether the systems we build today allow the best ideas and the best entrepreneurs and the best people to rise. So thank you very much to our panelists for a very thoughtful discussion. And I don't know if we have any questions or time for questions, but thank you to the audience. Wish you all a wonderful evening.